Hello, welcome to Al Stock Trades. Now, I promise you guys, this is not going to be a normal thing where we're going to be doing reactions. This is kind of annoying, but as someone in the scientific community and in the academic setting, whenever you see a scientist or someone who calls himself a scientist postulates some errors within, the physiological or pathological explanation of something, you want to go ahead and speak about that. So in this video, we're going to be reacting to Amit's channel. Now, in the video that I watched, I'm not so much reacting to Amit, but his two other friends that were saying some extremely wrong things. So I hope that maybe Amit can clarify and correct this error that this particular person says. You can hear two of me. Let's go ahead and oh, you're watching it twice in two windows. Okay. All right. Okay, let's get back. All right. So let me make sure my end is good. Okay, so this is a big deal. Okay, so there are these two other people that were saying some extremely wrong things. One was saying that, AMD, the numbers were bad back in the day. And the other guy saying, Benjamin Graham is, you can't invest like Warren Buffett. This is complete bullshit. This is this is the doggest bull I've ever seen. This is the smelliest piece of junk I've ever heard in my life, right? And unfortunately, the YouTube finance space needs to hear about this. It's extremely annoying, right? And I usually don't get emotional like this. But without further ado, let's go ahead and show you, all right? So we're going to go ahead and open up this video, and we're going to play it for you. I'm going to do it 1.5 times the speed because I can't handle the BS. And we're going to go ahead, and we're not going to watch the whole thing. I couldn't even finish the video, honestly. I just did the first couple minutes here. I want you to talk about this really quickly. So there's a feud between a couple of YouTubers. I don't really care about that. I just care about the substance of what they're saying.
That's it for us.
So if you guys can't hear it, let me know. But without further ado, let's go ahead and listen.
Guys, thank you guys for joining. Awesome Friday
We're
night.
We're not gonna talk about the YouTube beef.
Okay, so do you want to talk about the YouTube?
Hell yeah.
Okay, so let me set it up. And Sachin, I don't know if you know about this, so you can comment if you want. Jeremy, financial education, big fan of this guy. He had a stock go bankrupt called Voyager, lost a lot of money. Another YouTube channel named Everything Money called him out and basically challenged him to a stock competition over the next 10.
Now, personally, about calling out another YouTuber, he was a little harsh. Okay, calling someone names, I think we're a little bit more frontal lobe. We have a little bit more cephalization of the frontal lobe to allow ourselves to articulate in such a way that does not have to degrade someone. So maybe Everything Money could have done something differently, but this video is not about them.
Next 10 years to see who has better gains. It's like fun little YouTube beef going on. I think the macro discussion is growth investing versus value investing. A lot of the value investors are like, all the growth investors are screwed. All the speculative crypto investors are screwed right now, and they were right for the past couple of years. And the growth investors are like, yeah, but we made so much money on Tesla because you guys didn't get it. Even though we're down right now, eventually it'll get back to sort of the innovative times we had before. So Chris, where do you kind of fall on the?
And the answer to that question is both are correct. It goes from literally growth to value, and you have to essentially outline your portfolio for that, okay? Which is what we did in our price targets and our all stock alerts.
Lines of this.
I'm Team Jeremy, bro. Screw that. At the end of the day, when it comes down to
this is where the garbage starts to come out.
investing, there is a portion of investing that you have to take risks, right? If you want to do literally just this, like simple investing, like dude, if you want a consistent 7% return, I can get you that. Believe it or not, that's not that hard.
It's actually 7 to 8%, but 8%, 1% off.
You can just invest to an index and that's it. Call it a day. A lot of the companies that Everything Money, even they admit for the last 5 years, we didn't make any money, where Jeremy outperformed them for 5 years.
That's actually incorrect. If you actually follow Everything Money, they've been actually making money. It's just that video went viral. So you got to give them the benefit of the doubt. They actually did make money. And also Paul actually shorted the NASDAQ in the earlier stages in January and has made a killing.
Years, and then 1 year Jeremy has a bad year and it's like, oh, see, I told you so. Like, yeah, come on, you can't do that, and what's interesting is that while Jeremy's system of trying to pick winners, it's almost like maybe 1 out of 10 will be that exponential winner that would end up outdoing a lot of the ones that Everything Money puts out.
It doesn't quite matter, because if you're investing in 9 other stocks that go to crap, that doesn't overweigh that one that does go exponential.
The other thing is Everything Money looks at the numbers too much without really looking at other things. Like every time I watch their channel.
So this one, I'm halfway against and for. You have to look at the numbers, but the numbers can only tell you so much. When you have to, numbers won't tell you the moat of the business, right? The numbers won't tell you the actual things like in terms of, are they going to get a new CFO, X, Y, and Z, stuff like that, right? So I agree with him to that level, but this is when we start basically moving away.
Because I like to, watch and see. Everything is about their charts. Like, this company did this much this year, and they're projected to do this much this year.
That is important, actually.
Looking at any products and saying, hey, you know what? This could be the next big thing. Like,
yeah, that's called speculator. You are a speculator. Go read The Intelligent Investor by Benjamin Graham. I'll even tell you chapter 1 of The Intelligent Investor. It is called Investor versus Speculator. You are a speculator. Let me go ahead and maybe if you're watching this, we can go ahead and retry this out, okay? And hopefully this is an education. I know the Mastering Stock Market students and our Stock Alerts members are like, what the hell is going on? But I'm pointing this out to you so you can see the garbage of retail investors. This whole smart money, dumb money that we have, the graph. Well, you can see what these people fall into. Let's go ahead and retry this again.
This company did this much this year, and they're projected to do this much this year, without looking at any products and saying, hey, you know what? This could be the next big thing. Like,
without looking at any products, that this could be the next big thing. This could be the next big thing. You are a speculator. You are a gambler. That is gambling. Of course, you have to look at the numbers because if it's like the United States government printing all this money. If you don't have any work to back it up by, it's just a fugazi money. It doesn't exist, which is why it's being sucked out right now. And we're starting to realize that printing money doesn't work. Same thing. If you're getting a product that does not basically bring in money, then it's a shit product. Then in the forms of capitalism in a capitalistic society, it will not translate within the revenue, the top line, all the way going down to the bottom line, the net income and the income statement, which will then transform to the statement of cash flows and the operating cash flows from operating minus the capex, giving you the free cash flow of the company. But you know what? This person probably doesn't know any of that because he's a speculator.
Right now, Palantir, based on numbers, is not the company that you want to always just keep investing in.
No, based on numbers, Palantir is actually doing really damn good with a 30% year-over-year growth that just became free cash flow positive. It's actually the company that you want to do right now if you do an intrinsic value calculation. It is hovering right below, under, I believe, the bear market price.
You can see the future that they're actually going to be leaders in it. I had the same thing happen to me when I was thinking about investing in AMD.
We're going to do an AMD stock analysis right now, and we're going to show you how stupid this guy is.
And this was like 5 years ago when AMD was trading at around $10 a share. I was looking at the numbers too much as opposed to looking at the leadership, looking at the intangibles.
He was looking at the numbers too much. We're going to go ahead and look at the numbers. We have access to 30 years of financial data. We're going to look at the numbers, and we're going to see what numbers was he looking at.
And I missed AMD because I was like, well, they're growing. They're not growing that much. They're not growing that.
Which is false. They were growing that much, and you could have predicted the stock growth price by 2018. And which I'm going to show you.
Fast. The numbers don't justify the valuation. They have a lot of debt.
The numbers don't justify the evaluation. That's complete bullshit. We're going to go over it.
Blah, blah, blah. Without looking at, hey, Lisa Su is actually coming up with a lot of great ideas for what AMD is trying to do and believing in the vision that she was putting out there. I'm not saying you should always only invest in companies based on a vision, but you should show, you need to have a little bit of, what's the word?
Balls.
A little bit of belief in that. You have to have balls in it. I mean, it's like Tom Brady, right? Everyone, if you look at Tom Brady during the combine, bro, he sucked. He was one of the worst that ever did in the combine. Guess what? He's got more Super Bowl rings than anyone in NFL history. What does that tell you? That means that there are certain things that are not just on paper or not on a balance sheet, even though you should always look at the balance sheet. You should always look at cash flow statements, all that good stuff. But then also look at some of the other intangibles.
If you would have actually looked at cash flow statements and in terms of, I don't know what type of cash flows you're looking at, you would have basically seen AMD from a mile away.
Look at some
and you wouldn't have missed it.
Things that are happening in an industry. You look at right now, one of their biggest plays for the Everything Money guys was, we need to just keep buying Baba. Bro, they rode Baba from like 200, I think, or 200 or 300 plus, all the way down to like $80. And they were like, we just keep buying, based on nothing but numbers, without looking at the other side of it, which was, you've got a goddamn company that's being run into the ground by a communist regime. All you're looking at is, well, look at their profitability. They're doing so good in terms of profit. Yeah, but there's so much execution risk. You guys are completely ignoring the fact that the Chinese could just come tomorrow and shut the entire company down, and you have no say in it.
It's also because they follow Munger religiously, and Munger loves Baba as well. So,
this is where this other guy starts talking, and I completely disagree with him. Once he finishes talking, we're going to react to it, and then we're going to go ahead and do an analysis on AMD.
Let me share something on that part. And guys, I think this is a little lesson for all of us to think about this. I'm someone like who's a director of an actual PEVC fund. So take it with a bit of salt as well. That see, made money for 5 years. In a way, it's only relevant that what lessons these guys have learned. So when you talk about the value investing or growth investing, when you start putting yourself to a kind of a branding, it's very easy to say that I invest like Warren Buffett and I invest like Charlie Munger. The fact is, guys, you can never invest like Warren Buffett or Charlie Munger. Can you go to Oxy and can you get a deal with Oxy that I'm buying your stock and I will need an 8% dividend on top of it and I will get a convertible and this is the guy who is going to be the director for it? Can you do that? No. What people misread about Warren Buffett and Charlie Munger, because they know people cannot invest like them, so they don't advise people to invest like them. They say a common investor should do this. They never say a common investor should do this because we are doing this. And this is one of the biggest misconceptions in value investing. And people say, oh, I'm doing investing like Ben Graham. I'm investing like Warren Buffett. You cannot invest like Warren Buffett. Warren Buffett sold, shorted the puts on.
You can invest like Warren Buffett. Yes, you can. You can basically do a DCF, look 10 years into the future, discount back at a 10-15% discount rate, and divide by the number of outstanding shares using a 2% to 3% perpetuity model based on the standard inflation rate, which is now a little bit higher than normal, right? And then that'll basically yield you the stock price. This is incorrect. Now, I do agree, Warren Buffett has a sway, just like how he sold Oxy back in 2020, so Oxy can secure a deal with the government, right? So they can get some funding, and then he rebought back. I agree with that statement, but to say that you can invest like Ben Graham, that is complete crap. Okay? Well, Dr. Michael Burry, whom I actually emailed and spoken to, who's, essentially helping us with our course, yes, he invests like Ben Graham. Okay? Like Dodd, right? So Graham and Dodd, the the security analysis. Okay, so in any case, we're going to go ahead. We're going to remove this. That's all I have to say from this video. It really boiled me up, because when you have a bunch of new investors coming in, watching these people, you get to a position where it's like, it becomes very daunting. You're getting all of these advice and everything. My recommendation to all the new investors out there is to start from back in 1946, 48, when The Intelligent Investor was written, when Ben Graham actually wrote the book, and learn about value investing. Go ahead, also learn about Cathie Wood's investing. Know how to read a balance sheet. So we're going to go in right now, and we're going to share a screen here, okay? And we are going to take a look directly at some AMD, okay? So let's go ahead and go to our Brain Machine channel here. This is a proprietary software. So we're going to go ahead and let's look at the statement of cash flows. Let's look at cash annual, download, and let's do AMD, okay? As soon as we do that, we get the literally history of AMD here. So let's go ahead, open this up, and let's bring this open here, okay? And then I want us to, we have data from 2021 all the way up to 1989. Now, we don't need all that data, right? So what we're going to do is I'm going to shift it. So, the 1989 is here and the 2021 is here, okay? So let's shift that. So to do that, we go to data, we go to sort, we go to options, and we just go to sort left to right here. So now this is here. So what I'm going to do is I'm going to just kind of delete the 1989 all the way up. Let's delete all the way up to 2011. We don't need that. We'll look at the past like 10 years. Okay. Then I'm going to take these numbers here. Oops. And I'm going to cut. And I'm going to paste like that. And then I'm going to make sure the columns here, or we can just kind of stretch them out here. All right, so let's go ahead and look at the currency. I'm cleaning up the data here for you so we can see it. All right. Now I'm going to zoom in so you guys can see the numbers. Okay, so this particular individual, let's make it bigger here. He said, the guy, if you don't remember, this guy here, he said that he looked at the numbers for AMD and the numbers that it makes sense. Okay. So this is the numbers from 2012 all the way up to 2021. And he said he missed out on AMD. I'm telling you, this is BS. Okay. This guy doesn't know how to read crap. Okay. Which is why I made this YouTube channel. There's a lot of garbage. And, this is so not regulated. At least in the scientific community, even that's, you saw in the pandemic, you saw the crap that happened with the pandemic. But if you look at here, guys, I want you to look at net income, okay? AMD in 2012 was negative, negative, negative. So trash, trash, trash. Up 2018, AMD became positive. So I'm going to go ahead and highlight this. Okay. All right. Now I want us to go to cash provided from operating activities. Okay. AMD was negative, trash, trash, 2014, trash, 2015, trash, 2016, positive. Okay. So 2016, the cash flows from operations was positive. Okay. Subsequently after that, 2016, okay, something happened with the free cash flow, right? Again, for people that don't know, you just take the cash from operating minus the property, plants, and equipment, okay? Again, so if you go to free cash flow, which we calculate for you, free cash flow was negative for 2012. So trash for 2013, trash for 2014, trash for 2015. 2016, it was positive. So 2016 was a year to say, well, hold up. Something's interesting is happening with AMD. A change has happened in 2016. They're still not profitable from the net income, but their free cash flow has become profitable. So something happened in 2016. Then you can see 2017. They went from negative $497 million in net income to negative $33 million. You know how much of a big jump that is? It became less negative. Their cash flow is still positive. It decreased, but it's still positive. But if you look at their free cash flow, it was negative. Okay. But the year before that, it was positive. But you can look at the numbers here. It's because this went down, but also the amount of properties, plants, and equipment has went up. They started investing. Something happened here that this company started investing within themselves. You see, this is how you tell a story from the numbers, right? And I'm sorry to get like angry here, but these idiots are not like you say, "Oh, I'm so sad I missed AMD because I was looking too much at the numbers." Look at the numbers here. Maybe I hope you're watching this video. Maybe you can learn a thing or two, right? So then you can see here, 2018, they went back to negative free cash flow. Okay. So you could say, maybe it was a nothing burger. So what I speculate is the stock probably rose up in value 2016, 2017. Someone, and the market noticed this, but then it shot back down and then it shot back up because guess what? In 2019, look what happened. They went from an operating activity, the net cash provided from operating activities from 34 million to 493 effing million dollars. You know how big of a jump that is? Now let's look at the free cash flow. They went from negative 129 million to 276 million dollars in 2019. That right there set a trend like no other. That basically, if you were to graph this now, and we can go ahead and graph it here. Let's go ahead, graph all the way from just the operating activities. Let's go ahead and insert a graph. If you guys can't see it, you can see here. Let's make sure these numbers here. You can see that they were negative, 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 and something happened here in 2016 where they started becoming positive. Then there was a flop, and then all of a sudden they just bounced. And this is 2019. Okay. So you can see there's a change in the business. Okay. There's a change. All right. And then they became free cash flow positive for $276 million. So then now you can go to the balance sheet in 2019 and you can see what is the revenue percentage, and you can estimate that free cash flow and maybe have a margin of safety attached to it. Okay. But guess what? Now let's look at the stock price, okay? Let's go ahead and look at AMD, okay? So if you go AMD, their stock back in, you see, you can't really see here. It goes back to 2017. So let's go to our course. Let's go open up a new tab. No worries. Let's go to technical and fundamental analysis here. Let's look up AMD. And let's go ahead and take a look at the all, okay? And let's look at the line. Okay. We're not interested in technicals right now. Okay. Let's look at the line here. Okay. We're not going to draw spaghetti lines right now. Okay. So as you can see, 2016, the market noticed. The stock literally went from $1.42. The stock is literally $1, literally $1 to $2. It went all the way up to $13, $14. Okay. These are the types of plays I look for. Okay. Then you got that $15 mark, but then remember how they became free cash flow. They decreased in free cash flow and they had negative $129 million in 2018. In our course, we're going to break this down a whole lot simpler. I'm just giving this video really quickly, but then they went negative. So then the market reacted and they dropped the stock from 13 all the way down to like 10 and whatever. Okay. But then something interesting happened. You could have just ignored this trend and just looked at 2019 alone. For the first time, they went to becoming, if you just look, let's graph this. In fact, let's just stop at 2019 here. I'm just going to graph up to 2019 for the free cash flow. This guy says he looks at free cash flow. My ass, he looks at free cash flow. My ass, he looks at free cash flow. You can see something happened right here. Okay. In fact, let me do you guys a solid. Let me just put the years here so you can see it. You can see what I see. Let's go ahead and graph this so you can see what I see. Let's put the numbers here. If you look at this, guys, something happened where 2016 was the first indication that something happened within their free cash flow. Then it went negative. But then all of a sudden, 2019, that was a big story. Then if you look at the free cash flow, like, oh, wait, something happened. Then you could dig deeper. You could say, well, let me look at the cash from operating activities. You can see they were becoming positive since 2016. You could have purchased the stock at 2016. The numbers are great. Now, he also makes another comment. Now, let's go ahead and go to our brain machine. Let's go to balance sheet and let's go to download for the annual for AMD. Okay? Go ahead and do that. By us doing that, let's go ahead and bring this up here. Keep both. It's because of their same name. He says that the debt was high for AMD. So we could do that. It's called the balance sheet. So we're going to look at the total assets, which we're going to put in yellow here. Okay. And we're going to go ahead and we're going to look at the total liabilities. So we're going to just push this to currency because I know some folks have a hard time reading scientific notation. No worries. I understand. If you look at the total assets here, let's look at the total assets since 2016. There was a change, right? And if you go ahead and let's look at the total liabilities, which is how much money they owe, you can see that if you divide out total assets divided by total liabilities. In fact, for people that don't understand, you can do current ratio, right? And if you look at the formula for current ratio, it's the current assets divided by current liabilities, which is actually total current assets, which is actually this line here. Okay. So put that in green with total current liabilities. Okay. So if you actually take this number, assets divided by total liabilities, you get a interesting number that basically tells you it's most likely they have enough debt, they have enough money to satisfy their current liabilities. Now, to do that easily, you can hit financial scores, and you can look up AMD, and let me see here. Show you an easier way of doing this. So we can look at the annual company financial ratios. There it is. Look at the annual company financial ratios. You can look up AMD. You can hit up the amount. Let's do like 15. That'll track back 15 years. Okay. So let's go to 20. Here's 2018. Here's 2017. Let's stop at 2016. Remember our analysis? And let's go to current ratio. They had a current ratio of 1.87. Okay. Now let's look at their debt to equity. Debt ratio is 0.87. debt to equity. This is actually not, this is a different type of debt to equity. There's like different calculations. The one that I like to look at is actually taking all the debts on the balance sheet and dividing it by total shareholders equity, which is this number here. So you take all the numbers that have debt in them, and that'll give you the debt to equity ratio. But just automatically, this guy basically, this guy here, this guy, like I don't want to call him names, but I don't agree with him. We have a current ratio of 1.87. Okay, a current ratio that Warren Buffett likes to look for companies with a current ratio above 1.5, and this company has 1.87. Okay, guys, very simply put, it was very easy for us to see that this company was headed towards free cash flow positivity by 2016. What did the market do? The market took it to hell. The market literally took, it was literally trading at $1 to $2 while it was investing. And whoever saw it has made a killing. Okay. If you go ahead and take a look at, like, they were talking about how Jeremy has balls and how Jeremy does all these things. If you go ahead and take a look at what the balance sheet, income statement, statement of cash flows over his companies, I made a video recently about Coursera. You can see that Coursera has become negative. They went backwards. And they don't have a really big track record. They're not investing. Okay. So you need to be careful who you listen to. This guy doesn't know. He doesn't know his information. It's very clear. I just showed you the balance sheet, the income statement, and the statement of cash flows of AMD. I showed you their numbers, and you can look these numbers up. It's not like I made them up. You saw how I got them. Okay. It's very clear that AMD was about to blow up. He said that he looked at the numbers and the numbers didn't agree because he believed it was overvalued. How? Did you do an intrinsic value calculation? You don't even know what that is. You might after this video, might actually learn a thing or two. But to all the investing community, don't listen to this guy. I don't know nothing about AMIT. I just saw this video and I was like, this is complete trash. Okay. So anywho, there's my 2 cents. I hope that was helpful. I hope that basically saves some people, some from, very dumb advice. And I hope that was